Good morning from our global headquarters in New York City. I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda. A rally gets underway after a manic Monday bookends a $10 trillion stock wipeout in just 3 days. Negotiating, yet permanent. Washington's clashing comments on tariffs keep investors on edge. And fight to the end. Beijing vows retaliation. President Trump threatens to slap another 50% levy on China. So is this it? Is this the turnaround Tuesday, or is it the dead cat bounce? A healthy rally underway. Russell 2000 futures up nearly 2%. S&P more than 1.5%. A wild day of a swing yesterday. A fake headline on a 90-day tariff pause at one point causing stocks to surge 5%. It shows you just how badly this market wants to rally. Speaking of a rally, look at what can happen when you do get reassuring words out of the White House. The Nikkei rallying 6%. Treasury Secretary Scott Bessent saying, I would expect that Japan is going to get priority. So can negotiations happen? Maybe not if you're China. The focus of Trump's ire continues to be on that. Sovereign bonds, potentially the most interesting asset class. Heavy selling yesterday. We turn to a mixed picture this morning. A rally for the longer end because it was the longer end that took the brunt of the beating. The biggest spike for 30-year yields since March 2020. Biggest spike for 10-year yields since the Liz Truss global meltdown. We have a slight rally underway, and we're back above 4%, though, for your U.S. 10-year yield. So that's the overall market picture. Stocks, though, moving underneath the surface. Let's get some of your stocks to watch. With that is Bloomberg's Joe Easton. Good morning, Joe.
Morning, Danny. So I'm watching Broadcom in the pre-market today, gaining around 4% as the company says it's going to buy back around $10 billion worth of stock and reiterates the confidence in its key markets, including AI and also cloud software, providing some relief for a sector that's really been part of this big downturn in recent sessions. Then we've also got a bit of transatlantic M&A for you in Infineon in Germany, buying the automotive software division of Marvell Technologies, and we can see a decent move in that stock as well. Bear in mind, priced at 35 times earnings, much more expensive than it was predicted. Finally, Levi's reiterating its guidance in the apparel space last night after the close, predicting an acceleration in its organic growth, though analysts reckon those blue jeans are going to get more expensive due to tariffs. Finally, just to reiterate, the shout out for our pre-market wrap available on the terminal before the opening bell. Check that one out before the market open in New York.
Joe, excellent work as always. Bloomberg's Joe Easton. And in just a few minutes, we're going to be speaking with Seema Shah of Principal Asset Management. Later this hour, we'll also be catching up with Nancy Tengler of Laffer Tengler Investments. Now, as I mentioned, the bond market has had some interesting moves. Yesterday, it was 21 basis points higher for the 30-year yield. That makes the biggest spike for the Treasury benchmark since March of 2020, despite the fact that risk assets continue to be under pressure. Principal Seema Shah writes this: growth concerns are likely to dominate sovereign bond dynamics, pushing yields lower as labor markets cracks start to show more clearly. However, expected tariff-driven inflationary pressures imply that the bond market rally may be somewhat capped. I'm pleased to say that Seema joins us now. She's global strategist at Principal Asset Management. Seema, wonderful to see you this morning. It's been a wild ride. Yields dipped at one point below 3.9%. 10-year yields now back above 4.1%. Is there an element, because of what you outlined, because of deficit concerns, if we are going to a recessionary need to spend, that maybe treasuries are less attractive as a haven this time around?
Hi, Danny. I think there is an element of that. There's a lot of discussion in the marketplace exactly why yields rose yesterday. And one of the things that we're seeing is that because of concerns around recession, there are fears that, tax revenue is going to be somewhat lower, and that's going to be, of course, a negative impact on the deficit. And you couple that with concerns as well. I don't think anything's verified yet, but concerns that there could be growing, distrust of the U.S. Leading to additional upward pressure on the long end of the bond yield. So these are things that we do need to watch. Now, at the same time, I think the key things to consider is, look, if there are growth concerns, and provided that the Fed is cutting rates, there should be downward pressure on yields. It's just that it's not going to be as significant as maybe would have seen in previous downturns.
Seema, if we do continue to see this, though, maybe just a move slightly higher in yields, the dollar under pressure, stocks under pressure, is there an element, and you're kind of hinting at this, but I think it's a question that we're increasingly asking in these days, is it peak U.S. dollar asset ownership? Is there a sense that there's maybe a loss of confidence in the U.S.?
Well, I think it is really early days, but you're right that this is a conversation that people are already having. It actually started at the beginning of the year with conversations around U.S. exceptionalism. Now, I don't think anyone foresaw that it would spiral to this point, but it is a discussion. Now, I think the counter-argument to that, though, is to remember that, even if you're not interested in the dollar, there has to be an alternative currency, something else that investors are willing to put their focus on. At the moment, and certainly for the last couple of years, we haven't really had an alternative. So much depends on what's going to happen with Europe. Are they able to really strengthen their economies? What's going to happen with China? Does it start to also be seen as a reliable trade partner, investing partner as well? So there are still a lot of question marks, but this is clearly a conversation which is gaining a lot of momentum for investors right now.
And the other question that seems to be plaguing investors is, what does the Fed do? And I guess, how important are they even in this? But on that point, Seema, Austin Goolsbee spoke yesterday. I just want to take a quick listen to what he had to say.
The anxiety is, if these tariffs are as big as what are threatened on the U.S. side, and if there's massive retaliation, and then if there's counter retaliation again, it might send us back to the kind of conditions that we saw in 21 and 22 when inflation's raging out of control.
Seema, there we have what last year I think we can describe as the most dovish FOMC member talking about inflation like it's 2021 and 2022. What does that tell you about the Fed's willingness to step into this market and deliver it cuts?
Yeah, and I think those are really concerning words that we heard from Goolsbee there. Certainly, when we're looking at market expectations, I think for 4 to 5 rate cuts this year, we're not quite there. We think that the Fed is going to be somewhat constrained because of these concerns around inflation. They need to see, first of all, they need to see policy clarity, exactly what is happening with tariffs. We know that, of course, we've had the announcement, but we don't exactly know how negotiations, retaliation is going to work out. So I think the Fed is still waiting to see that. They also need to see how the hard data actually responds. We've only seen the weakness in the soft data. We are expecting it to play through in the hard data, but I think the Fed really needs to see clear evidence of that. And then the final thing, of course, and particularly the most important, is what happens to inflation and what happens to inflation expectations. From our forecast, we are expecting inflation to rise up to around 4%, if not slightly higher. And from our perspective, that means that the Fed is not able to come in with considerable aggression in providing the policy easing that maybe the economic side of the equation really requires. So it is concern, but again, so much is still to play for. There is a lot of uncertainty out there of how these negotiations are going to play out. And we could, as we saw yesterday, we could see some kind of headline which triggers a significant move in sentiment to the upside. And then we're in a very different place. So I think from the Fed's perspective, it is still a wait and see situation.
Can we talk about that for a moment? Just this insanity, it felt like in markets, where you get a fake headline about a 90-day pause written in the Bloomberg style on someone's Twitter account, and you see U.S. stocks surge and add $2 trillion and then wipe it out as soon as the White House responds saying that it's not the case. This is a market that is hanging on the words of one man, and that is President Donald Trump. Just how fragile is the market in this moment?
Well, as you said, I was there yesterday. We were all trying to desperately try and find clear evidence of that statement that was put out there. So I think there's two things it tells us is that the market is eager to have some kind of buying spree, right? So at the moment, for us, in terms of positioning perspectives, for example, we're not willing to move quite to an underweight position on risk assets because we know that there is a potential upside at any moment. But as you said, this is almost moving away from economics. We know what the economic picture could be, but the economic picture completely relies on exactly what the administration is going to do, and specifically what President Trump is likely to announce at any point in the next day, week, month.
Yeah, it feels kind of impossible in this moment, Seema, to do any kind of macro analysis or even any corporate analysis when we just don't know yet the full picture. And if it is bringing trade deficits to zero, it is a slow-moving ship. Seema, so wonderful to have you on This Morning and Every Morning. Seema Shah of Principal Asset Management. Let's get you some other stories now that are trending on the terminal. Billionaire Ken Griffin calling President Trump's tariff policy a, quote, huge policy mistake. The Citadel founder urged people to reach out to Trump and to encourage the president to take a step back. Griffin is part of a growing roster of prominent finance executives who supported Trump and have also spoken out about the risks of tariff policy since it was announced last week. Warren Buffett is among the rare few whose personal fortunes have grown this year in the chaos of the market. His net worth has climbed $11.5 billion this year to $153.5 billion. That according to the Bloomberg Billionaire Index. The world's 500 richest people have lost more than $500 billion in just the last two trading sessions that followed Trump's announcement on tariffs. Chinese auto giant BYD flagged that first quarter profit may more than double after a bumper start to the year that saw vehicle sales top 1 million. The company said total sales up to March are 60% higher than a year ago, and its overseas expansion achieved leapfrog growth in the quarter. Coming up, the U.S. threatens to retaliate against China's retaliatory tariffs. China vows to fight to the end. We'll break it down next on your Bloomberg Brief.
Would you be open to a pause in tariffs to allow for negotiations?
Well, we're not looking at that. We have many countries that are coming to negotiate deals with us, and they're going to be fair deals. And in certain cases, they're going to be paying substantial tariffs.
President Trump ruling out a pause on tariffs there. The administration, though, did have different messages on the scope of potential tariff negotiations. The president says that some tariffs can be negotiated while others are permanent. Treasury Secretary Scott Bessent telling Fox that everything is on the table. But meanwhile, White House senior counsel Peter Navarro writing in the FT that this is not a negotiation. We bring in team coverage of tariffs this morning. Brendan Murray leads our global trade coverage, European correspondent Oliver Crook in Brussels, and China economy and government editor Alan Wong. Brendan, let's start with you. Different messages coming in from the White House. How do we make sense of it?
Yeah, we definitely heard a range of things from the White House yesterday, for everything from the threat of another 50% tariff on China to talks that will begin with Japan. Japan didn't threaten to retaliate in the weeks leading up to this, so the reward, it seems, for the Asia's #2 economy is to sit down at the negotiating table. Now that was one of the rarer spots in line to have discussions with the administration. China, the relationship seems to be going in the opposite direction. Trump posted on social media that all talks are suspended with China. So there's a real a game being played here as to if the administration is saying, look, if you play ball with us, you just take the tariffs and we'll negotiate from there. Then you can have a seat at the table. If you retaliate against us like China has threatened, there's a game of chicken being played here to see who will blink first. And China is saying it will fight to the end. So here we have the world's two largest economies in a showdown over tariffs.
Brendan, but even that is a change in tone, because let's remember where we came from. Before this, we had Trump saying that these were permanent. The administration was really talking about this idea that they wanted to get trade deficits down to zero. The fact that they are talking about negotiations, not when it comes to China, but with other countries, have they given themselves an off-ramp after so many criticisms from those who support the Trump administration, business leaders, and the destruction in the stock market? Are we starting to see, despite Trump's denial, something of a policy put?
Not that we can tell. I mean, look, these tariffs are going to take effect in the next 24 hours, and that's where the negotiations start. Look at the example of Israel. Israel came to the White House yesterday. It walked away with no relief from the tariffs that Trump is putting on, the reciprocal tariffs that Trump is putting on Israel. So that is not a good sign if you are a U.S. ally who's looking for a break. This was something that was unexpected, and Israel walked away with nothing in return.
Yeah, again, I mean, you see from Scott Bessent there making the comment that he's optimistic about striking deals with other countries, but everything does impinge on one person's word, and that is the president. Alan, on that point, I want to get to you and bring you into the conversation, because we did have this threat from Trump of an additional 50% tariff on China. What's been the reaction in the region?
So China has responded with very tough rhetoric, saying that China will fight till the end. In fact, China called Trump's action to escalate those tariffs a mistake on top of a mistake. It left the door open to negotiation, but China has signaled that it will definitely dig in and not come to the negotiation table just because Trump is piling on pressure. Domestically, it also moved to shield the economy from some of the impacts of the tariffs, just to show that it is ready to take this battle.
Alan, I also thought it was really interesting, the story we have about Shein, that China has urging them to halt any supply changes that they might make in order to help get around some of the tariffs. For companies that are looking to get out of China, especially Chinese-based ones, how much resistance are they going to face?
Yeah, so China doesn't want factories to move out of China, and as we have seen since the first Trump trade war. So Shein now is, we've reported that, has gotten a memo from Chinese authorities that they don't want them to move production overseas. In fact, they canceled some reconnaissance tour in Southeast Asia, in Vietnam, after the authorities made that position clear. So it's a tough situation for those companies like Shein, because at the end of the day, they want to make more profit and they want to avoid the tariffs. But China worries about the implications of relocation to the job market, and also if Shein does it and other companies follow suit, what is left of Chinese manufacturing?
Oliver, let me bring in you, because you've been in Brussels, you've been speaking with leaders there, you've been getting the real-time reactions coming out of the White House. Trump has said no deal so far with Europe. What has been the reaction?
So what's very interesting in speaking to the number of trade ministers yesterday who were assembled in Luxembourg to basically try to assemble a coherent and cogent response to the Trump administration is that they're basically operating under Plan A and Plan B. Plan A is the plan that they would like to see, that is a negotiated outcome. But when you talk to these trade ministers and you ask them, do you have any idea what the Trump administration actually wants? Do you know what they mean by non-monetary barriers? Do you have a clear idea of what they're asking for? They really don't have a very good answer for that. When you ask them also, do you have any indication that the Trump administration actually wants to talk? The answer is, again, no. So that takes us to Plan B. And Plan B is a sort of more full-force retaliation by the Europeans that will include not only tariffs on goods, but also tariffs potentially and taxes on services. We're talking about U.S. tech companies as well, potential regulation there. This is the list that they're also assembling. The other thing we heard from all of them was that while they want to de-escalate the situation, they want a negotiated outcome. That is very, very clear. All options are on the table. Having said that, there's not been a huge amount of communication between the two teams, between the EU and the U.S. administration. We heard from the sort of trade emissary from the EU, Sefcovic, saying that basically we're not going to wait forever. What they're trying to do is build out as much runway as possible to have a negotiated outcome. Remember, they're going to impose some retaliatory tariffs next week. That is in retaliation to aluminum and steel. That is not in retaliation to the 20% we're expecting tomorrow. They're trying to build as much runway to have a negotiated solution, but the probabilities of that, Danny, at this point, I can't say seem to be very high.
Yeah, I mean, look, it has been China and the EU that seems to be the target of Trump's ire in this. Brendan, Oliver, Alan, thank you all so much for joining us. Brendan Murray, Oliver Crook, and Alan Wong with our Bloomberg team coverage. Coming up, after weeks of tension, Iran and the U.S. head to the negotiating table over the nuclear program. We're going to take a look at some of the top headlines this morning on your Bloomberg Brief. This is Bloomberg Brief. I'm Danny Berger in New York. Let's take a look at what the newspapers have on their front page this morning and what's making headlines. First up, the Washington Post has this, that President Trump said that Iran and the U.S. have begun direct talks over Tehran's nuclear program. The Iranian foreign minister confirmed the talks, but said that they would be indirect. Trump spoke about the upcoming negotiations.
We're having direct talks with Iran, and they've started. It'll go on Saturday. We have a very big meeting, and we'll see what can happen. And I think everybody agrees that doing a deal would be preferable to doing the obvious.
Next up on the Bloomberg, House Freedom Caucus Chairman Andy Harris says that he's open to the creation of a new 40% tax bracket for those earning $1 million or more. It comes after decades of Republicans opposing any form of tax increase. The GOP under Trump has grown more populist, allowing some lawmakers to back away from the party's long-held stance, along with concerns about a growing deficit. And the New York Times leads with the Supreme Court letting the Venezuelan deportations continue for now. They overturned a lower court order that had put a temporary stop to the deportations. It is a victory for the Trump administration, although it did not address the constitutionality of sending migrants to a prison in El Salvador. A quick check on markets as we head to the break. It continues to be a rally for U.S. stocks, up more than 1% in the pre-market session, 1.4%. With talk of negotiation with Japan and others, this market is treating it as, yes, this is a negotiation tactic from Trump. Is that really the case? We've heard from Peter Navarro writing in the FT saying that this is permanent and that this is not negotiations. Coming up, have we hit capitulation? We're going to discuss with Nancy Tengler of Laffer Tengler Investments, a conversation you do not want to miss. Stay with us. From our global headquarters in New York City, welcome to Bloomberg Brief. I'm Danny Berger. Let's set your agenda. Bouncing back, stock futures rebound after a manic Monday bookends a $10 trillion stock wipeout in just 3 sessions. Deal or no deal, clashing comments on tariffs out of Washington keep investors on edge. And fight to the end, Beijing vows retaliation as President Trump threatens to slap an additional 50% levy on China. So is this it? Is it the turnaround Tuesday, or is it the dead cat bounce? A 1.4% rally in your S&P 500 future sessions. We're still down some 11% since Liberation Day. By the way, Goldman Sachs warning of a bear market. BlackRock has downgraded U.S. stocks, so the sell side's still catching up with some of the losses. But here's what happens when you get the promise of a negotiation. Just look at how Japanese equities ended the session, up 6%. Besant saying that I would expect Japan is going to get priority. So maybe there are negotiations to be had. Maybe there is an off-ramp with the White House just concentrating on China to get the ire, to get an additional 50% tariffs. Maybe the weird thing of yesterday's session was the bond market with this huge spike in 30-year yields, the most since March 2020. For 10 years, it was the biggest spike since the Liz Truss global meltdown. We rallied this morning, though, down about 1 basis point across the curve. Well, Nancy Tengler of Laffer Tengler Investment is weighing in on the policy uncertainty that's been keeping investors on edge, writing, quote, "Have we hit capitulation? Depends on what the Trump administration proxies tell us beyond we have received phone calls from 50 countries. After that convoluted rollout, the market needs some clarity, like what kind of deals have been struck." Joining us now is Nancy Tengler, CEO and CIO at Laffer Tengler Investments. Nancy, thanks so much for joining us.
Oh my gosh, so
always
good to be
such a
here.
pleasure to see you. That makes complete sense, but how do you even do that in this moment? When you are hearing conflicting messages coming out of the White House, it's permanent, we're negotiation, this isn't a negotiation.
It's funny, I get the art of the deal, and I just don't think it plays very well in broad daylight. And that's really what we had. That rollout was more like amateur hour than The Apprentice, and I think then the proxies that have been out there, Howard Lutnick saying one thing, saying we don't have a plan for the dollar. What does that mean? And so I think the market got super skittish, as you would expect it to. Yesterday was interesting because we saw some calm. We were open down, 1,500 points on the Dow, and then we ended down, after many gyrations, we ended down about 350. And I think that was a sign to me that the market's starting to pay attention to, Scott Besant meeting with Japan and, some calm around the chaos.
It feels like such a sign of the times, Nancy, that we can swing $4 trillion and that's a calm day in this equity market. On that, though, look, I know there was this fake headline about a 90-day pause, and then we're off to the races, but is there almost signal to be had in that? The fact that equity markets saw that and believed it and were so willing to rally to such a huge extent.
Yeah, I thought that was really interesting because what does a 90-day pause do but extend the pain? But yes, I think that's absolutely true. And we may not be out of it yet. You know, we get a little rally today. We may have more selling. But I do think, I mean, we know one thing. We were due for a correction. We get one every 12 months on average, about 10%. So we knew that had to be in the offing. But it was just the ridiculousness of it all. When, you know, the futures were kind of flat. And then when he held up the chart, and, you know, we were all looking at it going, what? Those aren't the tariffs. And, you know, this interpolation of the trade deficit. You know, I grew up at the knees of Dr. Laffer. I'm partners with his son, Arthur Laffer Jr. And trade deficits are not necessarily bad. It depends on why you have one. And we have one because we're prosperous and we're a nation of consumers. And so this notion that all trade deficits are bad and therefore they're going to have to make it right, our trading partners, it makes no sense to the average person.
Well, it's interesting because I feel like you're describing two things. One is just the economic fundamentals and what might happen if we try to attempt that. The other you're describing is a loss of confidence in U.S. policy, it sounds like.
Yeah.
Which is more damaging at this moment?
The loss in confidence, for sure. I think, you know, I think it's not prudent to go to war with everybody at once. I'm sure that's a quote from Xing Su or one of the famous. But you want to pick them off one at a time. And so it appears now that the focus, as you mentioned earlier, is shifting to China. That would probably be okay with the markets. It's going to hurt some companies. We've seen Apple and Starbucks just get annihilated. They've melted down. But, you know, the other thing is to remember is that Americans want to buy cheap iPhones. They don't really care where they're made. So we have to kind of come to grips with that. And, you know, if this continues, the $500 billion that Apple, you know, pledged to invest in the U.S. could be at risk. And the last thing I'll say about this, Danny, is that, you know, we've been told it's for the manufacturer employment and the employing of U.S. people, Americans, however you want to say that. But, you know, we immediately saw layoffs at the auto companies. And if you look at manufacturing GDP, 68% is imported parts. So we have to, that doesn't get fixed overnight. So I think, you know, I heard yesterday that there's talk of a tax credit, an export tax credit for manufacturers. So if we're collecting over here and paying out over here, I really don't get what the point is.
Well, it's a really slow ship to turn around.
100%.
If you want to do something like this, arguably longer than a 4-year presidential term. So what do you think will be the willingness of companies to actually change their supply chains, to invest in manufacturing? Again, if it's a project that takes longer than 4 years, then Trump will be president.
Yeah, or 2 years when he's no longer, you know, before he becomes a lame duck. Because if this continues, I think then the House and the Senate are really up for grabs. So that would not be good for him. So that's why I think we'll get some resolution. But you're right. I mean, they already did adjust supply chains after COVID. And then we have the USMCA that was negotiated by President Trump. So these parts moving back and forth across country lines or borders, it was part of the USMCA. So I think that's where people are going, they're scratching their heads and saying, which is it? And you're bringing up the right, why are we doing this? Is it retaliation? Is it to improve jobs in the U.S.? I don't know. I think the message has been very muddy.
I gotta say, Nancy, it almost feels ridiculous to talk about markets and what to do in this environment when we're talking about these huge economic theory questions that we're watching play out, when we're talking about so much uncertainty. So what do you do at this moment in markets? Is it a time to sit on the sidelines? Do you buy the dip? Because these are big questions that we're trying to grapple with right now.
No, it's hard. And, you know, I have a track record. So, I mean, I manage money. I'm not a strategist that says, oh, I just lowered my year-end forecast, which is not a criticism. They have a different job, but I can't do that. So what we've been doing is we sat on the sidelines initially, and then on Friday, we put some money to work, and we added to names that we think will be beneficiaries of ultimately some tariff, but not the kind of confusion we're getting right now. So we added to Microsoft, we added to Accenture, we added to TJ Maxx, even though, you know, the consumer might be at risk. We think consumers are working, it's a higher end consumer, they'll be able to continue to spend. The import question is unresolved, but because they buy from 100 countries. But and we added to Netflix, so names that, you know, we own Spotify. It was one of our 5 for 25 names that would probably continue to do well if we do and go into a recession. But we're not walking away from the AI trade. We still think that will drive productivity. We've 5 consecutive quarters of 2% productivity growth. So I think we've just shifted to software, and we did that starting about 7 months ago.
So NVIDIA, I have to ask you about
we
NVIDIA.
We do. We own it, and we added to it.
Adding to it?
Yeah, we did a couple weeks ago. So we didn't bottom ticket, but I'm going to be happy with the purchase price a year or two from now. I mean, it's trading at a ridiculously low multiple and price earnings to growth PEG ratio. So we added to that. We even added a little bit to Tesla. And some of the software names like Palantir and CrowdStrike, which, in our growth strategy, those are names that we've also added to. I think investors, this will settle down at some point, and I think you still want to be long the AI trade.
All right, Nancy, next time we get you in, we're getting Dan Ives here, too. I think we need a conversation with the two of you.
We need a fashion off.
Yes.
Yeah.
Well, we know you're the more fashionable, Nancy. I think that's obvious to anyone. Nancy, thank you so much for joining. It's always seriously such a joy to have you on. Nancy Tengler there of Laffer Tengler Investments. You are watching Bloomberg Brief.
Would you be open to a pause in tariffs to allow for negotiations?
Well, we're not looking at that. We have many countries that are coming to negotiate deals with us, and they're going to be fair deals. And in certain cases, they're going to be paying substantial tariffs.
President Trump ruling out a pause on tariffs after a report, a fake one, sent the stock market soaring briefly on Monday. The president and two of his closest advisors each seem, though, to have somewhat different and nuanced views on how negotiations will go. Treasury Secretary Scott Bessent told Fox everything is on the table. White House senior counsel Peter Navarro wrote in an op-ed in the FT, this is not a negotiation. Meanwhile, President Trump says that some tariffs can be permanent and some can be negotiated. Joining us now is Bloomberg's Michael Shepard on this. Shep, really great to see you this morning. And look, there is a change in tone. As confusing as it might be, we hear the White House talking about negotiations, about meeting with Japan. Scott Bessent talking about 50 countries calling in and saying everybody's negotiating except China. Are they giving themselves a sort of off-ramp here?
Well, I think they're eager to have some sort of off-ramp, especially in the wake of the market meltdown that we have been witnessing unfold since the announcement on Wednesday. Investors and companies around the world did not digest the results of the tariffs that were unveiled last week favorably at all. And they see the risk to inflation, the risk to economic growth. And now the president and his team are trying to figure out what is the way out. Now, for Donald Trump, it's difficult for him to immediately signal any sort of idea of relenting on this big plan that he unveiled with so much fanfare. But at the same time, his advisors are trying to lay the groundwork for those talks. And Japan, significantly one of the world's largest economies, is a great way to start. Trump has traditionally had stronger relations with Japan. The former Prime Minister Shinzo Abe was particularly close to the president, and he's hoping to forge a similar bond with the current Prime Minister Shigeru Ishiba, and perhaps find a way to get more favorable treatment of agricultural goods and automobiles. Those are two areas where the president has identified as ones he would like to see some progress made on. And because Japan had come forward early with an idea of actually having talks, Bessent said Japan will be among the first in line to have that kind of a deal. It's less so with the European Union. Trump kind of turned aside this idea from the bloc to drop tariffs to zero on industrial goods. The president is complaining that the digital services tax and the value-added tax are trade barriers, and he would like to see some more progress there. And then there's China. The road to getting some sort of engagement with China is much more it's much longer and more difficult.
Yeah, I mean, look, it's clearly there's one policy for China in terms of just how permanent the tariffs are going to be versus everybody else. Shep, some must-watch TV today. The U.S. Trade Representative Jamieson Greer is going to be heading to Capitol Hill to testify in front of a committee. We have seen some on the Hill start to push back, a bipartisan legislation being introduced in order to curb some of the president's authority when it comes to tariffs. What sort of conversation are we expecting, and just how much pushback from Congress could we get?
Well, this could be a heated morning for Jamieson Greer, the U.S. Trade Representative. He will be going there to explain the administration's trade policy, and what better moment to do so than when it's really in the crosshairs of the entire world. Not only are investors and companies concerned about this, it's also the politicians in Washington, especially Republican ones, who are concerned that the blowback may hurt them in the congressional election scheduled for next year in 2026. And we'll be looking to see how Jamieson Greer defends the policy while also hearing some of the complaints from members.
Shep, thank you so much for that update. That is Bloomberg's Michael Shepard in Washington, D.C. Now, as we mentioned, President Trump has been threatening to slap an additional 50% tariff on China due to Beijing's retaliatory tariff. Chinese Commerce Ministry responding in a statement saying, quote, the U.S. threat to escalate tariffs on China is a mistake on top of a mistake. If the U.S. insists on its own way, China will fight to the end. For more, we're joined by Bloomberg's China economy and government editor, Alan Wong. Alan, what does that fight to the end look like?
That looks like China will dig in and do whatever it takes to resist the pressure that Trump has put on the country. Just a quick reminder that Trump has threatened 50% tariffs in addition to all the previous tariffs that he already announced. So that will bring Chinese imports to twice the price of the goods entering the U.S. So with that steep rise in tariffs, China said that it will fight back until the end, as you said. And it hasn't announced just quite what measures it has or plans to use against Trump. But it has signaled that it will be digging in and will not just be coming to the negotiating table just because the pressure has become so great. And at the same time, China has given its domestic economy more support, for example, by allowing the yuan to depreciate today a little bit more than it had previously allowed. So that effectively makes exports a little cheaper and offsets some of the impacts of the tariffs.
Well, as this goes on, Alan, meanwhile, you have companies caught in the middle with global supply chains that need to figure out what they're going to do. You have Apple saying it's going to move more of its production to India away from China. And you had Shein also had similar plans to try to get around some of these tariffs and go to lower tariff countries. China, though, pushed back on that latter one. Alan, how much is in China's control when, again, it is an important market for a lot of these companies to try to stem some of the outflows of manufacturing in China?
We've seen this happen during the first trade war when Chinese factories left China and set up shop in places like Cambodia and Vietnam. So it's natural that companies this time around also thinking about doing the same. But Shein now has been caught in the middle of the U.S. and China because China doesn't want to lose those jobs. And the Ministry of Commerce in China told Shein that it doesn't like it when they move production overseas. And Shein, in response, canceled a reconnaissance tour in Vietnam and other parts of Southeast Asia for some of its top suppliers. So it's not a good situation for Shein because as a company, it's looking to maximize profits. And obviously, it want to make stuff in a place that is cheaper to sell to the U.S. market, which is a massive consumption market.
And it just feels funny that, not that long ago we were talking about a Shein IPO. Just how much is that going to be put on ice? Alan, thank you so much. Bloomberg's Alan Wong. Now, as I mentioned, tariff uncertainty is keeping corporate America on edge. Apple may be the poster child for this. It's reportedly planning to send more iPhones to the U.S. from India to offset the high cost of China tariffs. That was in a Journal story. Wedbush analyst Dan Ives spoke to Bloomberg about the possible move.
It would take years to even make that more than 5%, just given the logistics and the nature of India, in terms of as Apple tries to move some stuff there. Look, no company in the world is hurt more from once that came out of Trump's mouth in terms of Taiwan and China tariffs than Apple.
Joining us now is Mandeep Singh of Bloomberg Intelligence. Mandeep, it does feel like Apple is kind of the perfect example of just how painful these tariffs are going to get. What is their ability to try to circumnavigate some of them?
Well, I mean, India is being thrown as one of the options where they could move more of their production to. But I would agree with the prior comment that, relocating the supply chains would take a number of years. And in this case, I think they're probably trying to work towards getting an exception, which is what happened the last time around, tariffs were imposed during the Trump administration. Apple was on that exception list. So I wouldn't be surprised if they work something out with the administration on that exception aspect.
Well, to that point, over the weekend, when Scott Bessent sat down with Tucker Carlson, there was a comment that I think didn't get enough attention. And look, things change quickly, so this might not even be the case anymore. But he said, the thing to watch is not country negotiations. It is company negotiations. Yeah. Mandeep, do you need to see, in order for this to happen, more investment promised in the U.S., more manufacturing brought to the U.S. in order for Apple to get any sort of exemption on what already exists in their supply chain?
Yeah, I mean, they announced a $500 billion investment that will span a number of years. So to my mind, that's a pretty big number. And look, this is a company that does almost $100 billion in share buybacks. So could they do more in terms of capital allocation? They probably could to appease the administration, but there's no doubt that, they are getting hurt. And if the goal of the administration is to work towards, making these companies bigger and better, then obviously it's not helping Apple from that aspect.
You mentioned buybacks, Mandeep. Broadcom gaining this morning in the pre-market session. They announced a $10 billion share buyback, but here you have a company that also has to deal with supply chains. That's also a supplier to Apple. What do you make of that?
Yeah, look, I mean, when you look at the valuation multiples, they have compressed almost 30-40% in almost less than a week. So from that perspective, the CEO is signaling that, they find AI demand to be sustainable, and they could generate enough cash flow to support a buyback. I mean, a company like NVIDIA will generate almost $100 billion in free cash flow. So from a demand perspective, I think things still remain the same in terms of AI being a secular trend and everyone being excited. So unless the CapEx numbers go down from hyperscalers, I don't see how that's changing anytime soon.
The AI trade is still there. Nancy Tengler saying much of the same. Mandeep, thanks so much for joining us. Mandeep Singh of Bloomberg Intelligence. This is Bloomberg. Let's get you set up for your trading day today. We'll see if it's a calm one or another multi-trillion-dollar swing. Walgreens, they will report earnings before the bell. Then U.S. Trade Representative Jamieson Greer will be testifying before the Senate. And San Francisco Fed President Mary Daly, she will be delivering remarks at 2 p.m. Eastern. We're also going to get some Treasury auction that includes $58 billion of 3-year notes later today. Well, I mentioned, is it going to be another chaotic day? Look, this market does really impinge on just one man's word, and that is Donald Trump's. But some of the tea leaves coming out has been, we are negotiating with the likes of Japan, and that's enough to get your pre-market session to look like this. We're up more than 1% across the major indices for your futures in America. All right, that is it for your Bloomberg Brief. Surveillance will take the reins from here. You're watching Bloomberg.